Good evening, everyone. It is 9:01 p.m. Eastern Standard Time. Today is Thursday, April 13th. This is James coming to you from Dividend Stock Talk, where we talk about dividend stocks, investing in dividend stocks to gain monthly and weekly cash flow. Because let's face it, we all get our bills every month. Every month you get a bill from the water company, the electric company, the phone company, the mortgage, the insurance, blah, blah, blah. All those people wanting your money. So what do you got to do? You got to work for it. You either got to work by exchanging your time for changing your hours for a pay. Go in, punch a time clock, get a paycheck, 40 hours a week, whatever that is. Or you make investments, or you collect money from some real estate, or some way of making either your money work for you or you working for your money. One way or the other. There has to be a way for you to pay your bills on a monthly basis. Because let's face it, we all have them, and we're all going to continue to get them to the day we die. Matter of fact, even when you die, you can get more bills after that. But that's a conversation for another day. So it is Thursday. Tomorrow's the last day of the week, and it is Friday, so we have options expiring. Weekly options expiring tomorrow. So I'm going to go over some of the positions that we're in today, or actually in for this week, where we are at the moment. Go over maybe a couple of trades and see what we're going to look at tomorrow, because we will be here again tomorrow afternoon at 3:30, just before the market closes, so we can get kind of an idea what we're going to do just before market close. That way we know what's up. All right, let's check on our positions. Now this first one we're going to check on is our dividend on steroids positions. We got 4 positions here. We're only trading 4 stocks because we're just looking to capture the run-up or the movement before the EX date. Now the EX date is kind of like a seasonality trade. I mean, something that happens on a continuous basis year after year after year. Christmas comes every year. New Year's Eve comes every year. Summer, spring, certain events happen that make let's say, for lack of better words, make stocks move one way or the other. Now, some of those things can be as simple as, first day of spring, school's out, or school's beginning, or New Year's, or Valentine's Day. Perfect example. Valentine's Day, just before Valentine's Day, Hershey stock moves up. Within the first week of February, it moves up. The end of the year, Google stock goes down. Why? I don't know. I don't really care. All I want to know is it does it, and it continues to do it, and how can I profit from that situation? All right, so let's jump in and see what we're looking at. We have 4 positions in the dividend on steroids. Dividend on steroids strategy. All right, BMO is our first one we're going to take a look at. BMO. Let's expand this. See what we're looking at. BMO starts the year off way down in the $63 area. It's got the trading range, and it trades for about 7 months. And right at election time, everything goes from 63 and it jumps up to another trading range of 74. It's like a $10 move within about a month period. Okay, so she goes sideways for quite a while. And right now, today, she had a big down day. Wow, look at that. She opened up at 74.09. She hit a high at 74.18. And then she closed at 73.05. Wow, that's down for over $1. $1.05 she was down. Wow. Okay, so that must make me feel good. I bought 600 shares of that this morning. Let's see what we're looking at. 600 shares at 74.10. Ouch. This is one of those points where people say, hey, when's the best position to get into? Not the one I got into today, at least. I'm not going to say that because that's not purpose why I'm buying this. Okay, I had a good reason to buy BMO in the first place. The charting software said one thing. The trend said another. The seasonality said another. So I had a lot of reasons to buy this. Okay, now if I choose to hold it, I'm going to collect the dividend on it. But I'm mainly looking to get a target of 75.96. 75.96 is way up here. Wow. I might end up just collecting the dividend on this and then bailing. But we will soon find out, because we got, 10 days? 8, 7, 6. When did we buy this? We bought this on the 11th, which was 2 days ago. So we got like 7 or 8 days left. trading days. That's about another 2 weeks. So another 2 weeks we'll decide whether or not what we're going to do with BMO. But BMO, like I said, I'm quickly going to show you the seasonality on BMO, give you a better idea of what we're looking at. Okay, here's BMO right now. The crosshairs. Well, let me just show you the whole year. This is what BMO looks like for the year. Now, this one's a little bit different than the chart we just looked at because the seasonality chart starts from January and it runs to December. What does a stock usually do during the year? That's what's showing now. Now, this blue line, you really can't go by the blue line because that's what it's doing right now. So how do you relate it to where it is? The only way I can figure out to relate it, because this right here is only 4 months worth of data, whereas this is an average of 10 years worth of data. Okay, so we have 10 years worth of data down here on the seasonality line, and that's what we're using to make some of our decisions. Because just because the stock looks like this now, that's only 4 months, as opposed to 10 years. So you take one chart and put it on top of another, on top of another, on top of another, and you get sort of like a pattern that happens. You know, it moves a certain direction, a certain way every time over the course of the history or over the course of the last 10 years. And that's what I'm looking for. I'm looking for a seasonal pattern. What does the stock usually do this time of year? Now, we know that BMO has a dividend coming up. And just for the fun of it, let's just throw, for those who aren't aware of what we did yesterday, let's quickly look at BMO and see what that looks like. Okay, there we go. BMO, and let's get out of there. Let's get rid of the average line, which, well, just look at the average line. That way we're not looking at everything else. Now, BMO, at first glance of what you're looking at, let me briefly explain what we're looking at. Is the 10 years worth of data. How long does it take the stock to move from 10 days prior to the EX date, add the dividend into it, and then get a new target and get back out again? That's the only thing this software is looking at. Okay, if you take, for instance, the opening price of today, you add the 66 cents to that, and now you have a new target price to look at. How long does it usually take to reach that target? Now, 2013 is going to be different because 2013 it was a different number. The stock was at a different price, and the dividend was a different number also. But what's not different is the EX date. The EX date is what it is. Now, we're just talking about 2013. 2013 is right there. Okay, so the high of the year in 2013 was actually the end of the year. Okay, then December 31st, it was the high of the year. Sorry. Let me first briefly explain. This is not showing the whole year. This is only showing 100 trading days. Why 100 trading days? Well, let me briefly explain that to you. The red dots, as you know, or if you don't know, those represent the EX date. Okay? This one right here just happens to represent 2013 EX date, which just so happened to be the 29th. The 13/4/29. See that? 13/4/29. I'll get back to there. That means April 29th, they paid the dividend in 2013. All right? So, to the left side over here, that represents, and as you move this, you'll see the number in the top left corner of that box that keeps moving around. That represents how many days prior to the EX date. This is 3 days prior to the EX date, 4 days prior, 5 days prior, 7 days, 6 days in there somewhere. 7, 8, 9. All right, anyway, all the way to 10. 10 days prior to the EX date, what happens to the stock? Now, I was telling you this is not the whole year. 10 days prior to the EX date, and then anything to the right of the red dots is 90 days after. Why 90 days after? Because usually every 90 days this company pays its dividend. Okay, so if you look here, it's going to be another dividend date, But that's not what I'll look at. That's not what I want to look at. What I want to look at specifically is the dividend date itself and 10 days prior to it. On average, what does a stock usually do? You buy it, it goes up to the EX date, and then it drops down, and then it goes back up again. 2012 did the same thing. It went up, went down, then it went back up again. 2011, same thing. It went up, it went down, it went back up again, and it went down again. No, that was 2011. But on average, what I want is the average movement, okay? And here is the average movement. 10 days prior to, it gets in and it moves up. Okay, now this software tells me to get out before the EX date. So if the EX date is 8 days or 7 days away now, because I bought this 2 or 3 days ago, I want to get out within the next 5-6 days. So probably by next Friday, I want to be out of this stock. Because I don't want to hold this past the EX date. Okay, if I have to, I'll sell it for exactly what I paid for it, but I don't want to hold it past the EX date. I don't even want to hold up to the EX date because, as you can see, it usually drops right around there. That's not what I want to do. All right, it looked good on that software. Now, what were we looking at? It's funny because I was just talking about it a second ago. All right, BMO, and hit go. Okay, as you can see, BMO may not have 10 years worth of data, but it does have quite a bit. All right, it's an average of 3 days, maybe 4, so it's less than a week. The average hold time. It closed at 74. The high was 78. The low was 60, and it has a 1-year target of $76, which is great. Don't get me wrong. The dividend is $66. It has a 3.6 yield. And here it looks like the average trading volume is right around 400,000. 3 days ago it was 500,000, so I don't mind. It's a nice number. I can get in and get out. Now, I'm going to check this. Is going to be the 10-year chart of how this thing has traded over the last 10 years. So if worst case scenario, if I have to hold on to it, then I'm okay with holding on to it. Now, it's not the greatest chart in the world, but I'm not looking for growth. I'm looking for cash flow. Now, cash flow and growth are two totally separate things. All right? Cash flow, if I can gain cash flow from a stock that looks like this going sideways, because that, my friends, is basically what a sideways looking stock goes. 10 years ago, she was at $62 and basically going sideways for almost the whole 10-year period. And now she's at $72 or $73. It's not a big growth company, no, but take a look down here. Look at all of these diamonds have a little D in them. Dividends, 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 dividends. Very nicely. Now look behind those, and what you're going to see is green lines and red lines. That represents volume. As you can see, the volume, it's not huge and it's not, non-existent. It's like a steady volume. It doesn't really go up over the D's and it doesn't go really below the D's. It's pretty steady. So this, to me, what this chart shows me is it's a steady, sideways moving stock. And if the other charts here say that I can get in and out within 3 or 4 days and get my profit, 3 or 4 days, then why the heck not? Okay, so let's go back to here and let me re-explain to you a little bit more about the seasonality. Now, we really can't use this one, like I said, because it's only 4 months worth of data. But this is 10 years worth of data. Okay, as you can see, where we are now, right here, right? That's the blue line, that's today's date. Cross-reference it with this one. Okay, what does it look like it's going to do in the next couple of weeks? It's going to go up, okay? But I only want it to go up for a couple of days just to hit my target or, get back out with, at what I paid for it. Granted, I lost $1.05 today, but that's comes to $630. Okay, not a big deal. You know, nobody wins them all. That's why I tell everybody, nobody wins them all. I've been trading for over 20 years, and nobody wins them all. Plain and simple. Take your lumps as you get them. Okay? Look, lost 630 there, but gained 750 there. Okay? That works. All right, let's go back and so that's why we got BMO, and we're going to hang on to BMO. So we're not going to sell anything. Let's bring this back to normal, standard, and take a look at CL, Colgate-Palmolive. Okay, here we go. Colgate-Palmolive. Basically going sideways for the first couple of months of the year. Around the 71 area, she jumps up, goes sideways for quite a bit. Another 3 or 4 months going sideways in the $74 area. Drops down to a 66 trading range and does that for several months. Then she jumps right back up to the $74 area again. So here we are back at the $74. Now, Colgate-Palmolive is a name brand everybody knows. It's a household name. Everybody's heard Colgate-Palmolive. All right, so anyway, they've been in business for over 100 years, and they are a dividend king. What that means is they've increased their dividend payment every year for a minimum of 50 years. So if I hold on to these 1,300 shares, in 90 days, I'm going to collect 1,300 more dividends of whatever it is. I forget what it is. So I don't feel bad about that. But anyway, we're up 754 with Colgate-Palmolive at the moment. And then the same thing. You know, it's dividend king. Everybody's heard of it. It looked good on the charts. It looked good in the 10-year chart. It looked good on the all the other software. If you don't have access to the software, just join the service. It's only $29 a month. Just join the service. Gain access to the software. You can use the software to decipher who's moving, when and where, and how much. All that kind of fun stuff. Anyway, so Colgate, we're going to hold on to that one. It's a dividend king. If we have to hold on to it longer, we keep collecting the dividend. Now, Macy's, M, right here. We bought Macy's, how long ago? Back in March, I think. I mean, that's funny, that was only last month. February 21st, we bought Macy's, okay? And look at the end of March, we ended up collecting 21 more shares because of the dividend payout. Okay, so that's $612 worth. Okay, so anyway, we collected 21 shares of Macy's, and we're still holding on to it. Here we are into the middle of April, and we bought this stock in the February 21st. So that's over a month and a half. And I usually don't like holding on that long. And the reason why we're holding on to it, Macy's is over 100 years old. It's a well-named company, but Macy's is going down, but the software said this. So there's your proof in the pudding right there. No, I don't win them all. I do lose. But am I losing on this one? Not really, because I still have the 1,621 shares. And quickly look at this. Let's reset there. Put my M back in here. Add and go. And that's telling me when is made. March. Okay, so Macy's is going to pay out their dividend again in June, in the third week of June. Okay, so I'm kind of hoping I'm not holding it by the third week of June. But look at the yield. We're getting a 5.09% yield. I don't mind. 5.9% yield. 5.09. Sorry. So it's a good yield, and I don't mind holding on to it. Macy's, everybody's heard of them. So let's get this thing out of here. All right, let's get back to where we were. It keeps on moving. I'm not very computer literate, but I do know my way around a little bit. Okay, so Macy's, we're going to hold on. Let's quickly bring Macy's up for you, show you what it's doing. Okay, Macy's started out the year right around 40, went a couple weeks there, dropped down to a trading range of 32, traded a couple of months there, jumped up to 36, went a couple of months at 36, hit the peak of the year at 45, okay, and then drops from 45 all the way down to the trading range of 29, where she is now. So she's at 29 at the moment, and we're looking to hit 33. Wow, 33 is going to be close to what we bought it at. 33 tanks. I think we bought it at 33.9. 33.09, but I just wanted to collect my money back because I already collected the dividends, so. All right, we just covered Macy's. Now let's go SKT. SKT starts the year out at 36, drops down a little bit to 34, and then from 34 she shoots up to a trading range of 40, 41, goes sideways for a couple of months, and then slowly over the next few months drops down to a trading range of 33, trades 4 or 5 months at 33, drops down to where she is now at 32.6. All right, she's at 32.6 now, and we're looking for a 33.7. Okay, so we haven't really lost very much with SKT. And we just got into this one 2 days ago. Everything looked good on it. That's the reason why we bought it. If you really need me to show you SKT, here we go. SKT. Another one, not very much. Well, yeah, with that 7 years worth of data, average of 2 weeks. You really can't count 2010. That's that's what, 2 months, 2.5 months. Wow, before it hit, but finally hit. But these numbers looked okay. All right, so it had a close of 32. The high was 42. The low was 30. It's got a 1 year target of 35. The dividend's 32. And it's a yield of 4.2. I wouldn't mind holding it at 4.2. The 10-year chart, as I recall, looked pretty good, or we wouldn't have got it in the first place. But SKT, it's the Tanger Factory Outlet Center. I never heard of them. Imagine that. So this software doesn't look that, this stock doesn't look that bad. 10 years ago, she was at 21, okay? Now, she's at 32. So that's a nice 50% increase in 10 years. Not bad. But it's not really a 50% increase in 10 years. Well, it is and it isn't. All right. So it's at 21 10 years ago. It goes sideways for a little bit. And she hits 21 again back in April 2010. And then from 2010, she goes from 21 all the way up to 32, 30. And hits a peak of 30, 37. And drops down into a trading range of 32, 33. And it does that for the next 4 or 5 years. And she's at 32 now. So that, my friends, is nice. We have all these dividends down here. It's great. They're paying a dividend. That's great. Wonderful. Yay. All happy. But she seems to be a very steady stock. And over the last, look at that, from 2012 all the way up to 2017, she's in this tight little trading range between it was at 32 and 37. So it's going to be continuing going sideways, which I can deal with that because basically, like I said before, I just want income. I want a little bit here, a little bit there, a little bit there, but I want consistency. So I'm trying to pick stocks that have a strong consistency and continue moving the way that I want them to move. Let's jump back to where we were. That takes care of SKT. We went through all 4 of these yet again, and if you add it all up, we're at the second week of the second quarter, and we're at 17.7%, which is not bad if you think about it, because most people look at 17% for the whole year, and here we are, 17% in the second quarter. We're just starting the second quarter. All right, so tomorrow at the end of the business day tomorrow, I'll give you a good idea what the second week of the second quarter is looking like. But that is dividends on steroids. Again, we buy the stock 10 days before the EX date. Get out before the EX date hits and just capture however much movement that is. I usually have a set target at 2.5%. That works for me because I'm basically like a lazy trader, set to forget it, get in and then the computer do its thing and then gone. All right, so let's jump in and take a look at the options. Because like I say, we trade like several accounts, but these are the only 2 accounts I share readily with everyone because they're consistently all doing rather well, but these 2 are the ones to give you some kind of basis to look at. Now this, not making me happy at the moment. I didn't take a look at this at all today. This is the first time I'm seeing this today. So let's quickly take a look And what we're looking at, okay, APA is the first on our list. So let's look at APA. APA starts the year at a trading range of 54, trades about 4 months that way, makes the low of the year right at 48. From there, she jumps up to a trading range of somewhere around 62. And then at the beginning of the year, she drops all the way down to settle into the $52 trading range where she's at right at this moment in time. Now, what we're looking at this moment is 3 down days in a row. Monday was good. Tuesday was a down day. Wednesday was a down day. And today's Thursday, a bigger down day. She opened up at 53.62 and she closed at 52.37. Wow. Okay. Now, where are we? All right. 53 and a half. We are way out of the money. We have a $1,500 loss so far. Like I said earlier, nobody wins them all. Now, we made a nice little profit off APA last week, so this just could be karma, it could be payback. I don't know. Anyway, it's not over until 4 o'clock tomorrow. That was APA. C, let's take a look at what C is doing. C is Citigroup. Citigroup starts the year off at a $44 trading range and trades for 6 months in that range. Jumps up for about a month at 49. Right around election time, she goes from 48 and she jumps up to a $58 trading range where she is at this moment in time. And this company had 2 down days in a row. Well, Monday was a down day, Tuesday was a good day, Wednesday was a down day, and today was a down day. Wow. Today she opened up at 58.30, hit a high of 59.73, but closes at 58.04. And where are we with Citigroup? All right, we're at the 59 and a half. Wow. That's a big move he's got to make for tomorrow. And I don't think she's going to do it. But what do I know? Okay, last couple weeks ago she did. Look, a nice move there. You know, boom, boom, boom. That's what we're going to have to look to that again. We wanted to get past 59.50. I don't know. I don't feel confident about it. It doesn't make me a happy camper. But you never know. Because everything goes great until it doesn't. And today, it's not looking good. So we're down 1,400 on Citigroup. All right. So it be. All right. CL, Colgate Palmolive. We just went over this one a couple of minutes ago. All right. She goes sideways for a while in the $70 area. Jumps up to the $74 area. Goes around sideways for a while. Drops down to another trading range of 66. And then the beginning of February, she shoots up to the $73 trading range where she is now. Okay, so Colgate Palmolive, what do we have for options on Colgate? 50 contracts of 73 and a half. All right, this one we're up $900 on. Okay, not the greatest in the world, but hey, it is what it is. All right, Colgate Palmolive, 73 and a half. It's basically in a good position where it is. So we're basically going to leave it alone, not do anything about it. We don't. Now, the reason why I say that this is in a good position because the way a spread works is when you buy the 73 and you sell the 73 and a half. Okay, so I bought it at 73 and I'm selling it at $73.50. The most I can possibly make is 50 cents. However, I paid 30 cents for it. Okay, so the most I can make now is only 20 cents. Okay, so I'm buying something for 30 cents and I'm selling it for 50. Okay, although the stock says 73 and 73.50, the option is basically how do you explain that? You're not actually paying 73, okay? You're paying for the profit between the 73 and the 73.50. Okay? So it's kind of like a long train ride. And you're not getting the whole train track. You're only getting this small section. The small section that I'm looking for is between the 73 and the 73.5. Okay? Now, I'm not paying $73 for that. I am paying 30 cents. So the most money I can make on that 50-cent move is 20 cents. So I paid 30 cents. The most I can make is 20 cents. So what's my return on my investment? 20 cents is very close to 60, 70% of 30. So if I'm profitable on this one, then I make over 60% return on my money for 1 week. Fine and dandy, but as you can see, I'm losing APA and then Citigroup. But that being said, Hasbro, here we go. Hasbro is basically going sideways for the whole year, 9 months. And from the beginning of February, she jumps from 82, jumps up to 97. Why is that? I don't know. Okay, so at the moment, Hasbro's at 95.50. And what do we have, Hasbro? 95.50. So, if Hasbro stays above 95.50, where she is right now, then we're profitable. So, a stock can move 3 different directions: up, down, and sideways. So if it goes up, we're making our money. If it stays where it is, we're making our money. The only way we're going to lose is if this stock goes down tomorrow. Now, Hasbro, we all know, is a very well-known company. It's like another household name. Not really, but you know what I mean. It's a very well-respected name in the industry. Now, if you look at the chart, she's been going sideways for quite a bit. Had a little bit of profit here, going sideways, and then she had, what is that, a whole week? A little over a week of down. So 1, 2, 3, 4, 5. That's a whole week. 6 down days in a row. Now you have 2 up days and 1 down day. What does that exactly mean? I really don't know. But by reading the chart, it reads as if found some new support here, and she's going to go back up. Let's go back just a little bit. Okay, for some strange reason, she was on trading range here. And then she jumps all the way up here and then moves sideways. So here's the new trading range she's been in for the past couple of months, since the beginning of February. Now, almost all of February, she's up in that $97 area. All of March, she's up in that area. Now at the beginning of April, she drops down to a little bit to the $95, $96 area, and she's going sideways again. What's it going to do for the rest of the month? I don't know. Could this be the new norm for Hasbro? It very well could be. Let's take a look at what the seasonality chart shows us to give you an idea of what she's done over the last 10 years. Because as of Tuesday, we showed you the reason why we were getting in Hasbro in the first place. So I really don't want to go over all that again, but I think it's time we do show you the seasonality and see what she looks like. So what we can expect for tomorrow and the next couple of days coming out. Now, as you can see, this is what it's done the last 4 months, and this is what it's been doing over the last 10 years. Here's where we are right here, right now. You got the dividend coming up, and look at that little spike right in this little area. So I'm going to enhance this a little bit so you get a better view of it. Okay, this is where we are. This is Thursday. Okay, tomorrow's Friday, and we can hopefully look forward to this little up movement right there, or stay the same. I really don't care, but it's not showing a downward movement, which is good, because we have 3 different directions the stock could go. Make money if it goes up, make money if it stays the same. We can only lose money if she drops. So hopefully Hasbro will follow suit like it's done over the last 10 years at this time frame and continue to stay where she is or go up. So I'm happy with Colgate-Palmolive. I'm happy with Hasbro. Let's take a look at Lowe's and see why we're losing with Lowe's. Okay, let's get back to where we were, and let's check out Lowe's. All right, looking at Lowe's Lowe's starts the year off and trades in the trading range of, was that 76 for a couple of months, jumps up, trades 79 for a couple of months, jumps up, trades 82 for a couple of months, and then right here she drops back down to the $77 area, then she drops all the way down to make the low of the year, right around election time, and from the election, she starts going back up again. Now, why this happened is beyond me. February 28th, she was at 75 bucks. She jumps from 75 all the way up to 82, and she starts trading for the last month and a half in the $81, $82 area, which is where she is now. Now, we had 5 good days, and today a bad day. So let's find out what we can expect from Lowe's. Youch. That don't make me happy. All right, so we're looking at the 82, 82 and a half for Lowe's. And where she is now, she's at 81.06. So I think she's going to get 82 and a half. No, I don't think so. Is that right? Yeah, 82 and a half. Well, 82, she might be able to hit 82. I'm confident about that because she was down, 81 cents today. She probably hit the 81 cents again, which makes it back at the 82. But then again, we won't be looking very good with the 82 because we're looking to get 82.50. Can I see him making that much of a move? Not really. Is it possible? Yeah, it is. I mean, look, you get a nice movement here. Okay, I mean, that's a nice move. She moves from 81 and a half, closes out at 84. That's only a dollar move. Here she starts out at 82. It goes to 83.29. That's $1.20. So do I see it making a $1.50 move? No, I don't. I have to face that. So looks like I'll be out on Lowe's also. But last week we made a bunch of money. I made a couple thousand last week, so it looks like we're paying back this week. Okay, because we ended up last week, I think we're at 39, and now we're at 35. So that's down 4,000 bucks for the week. See that? Down 4,000 bucks for the week. Win some, lose some. Nobody wins them all. Just want to let you guys know that. However, we're up 35% the first, and we're to the second week of the second quarter. So 35% is pretty darn good for the first quarter. And let's see what happens at the end of tomorrow. Now, stay tuned for us tomorrow at 3:30, where we go into the market wrap-up for the rest of the week and find out if and how much money we actually lose tomorrow. Because at this moment in time, it's not looking good. But, like I said, nobody wins them all. And I will take my licks just like everyone else does. So, with that being said, let me quickly check and see if we have any questions. If not, we can sign out. No questions. Yes, gotta love it. All right. So anyway, this is James signing out from the 10-Minute Trader and Dividend Stock Talk, and we will look forward to hearing from you another day.